Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
All right, welcome everyone to the latest edition of the Cape Fear Report. I, of course, am the aforementioned host of this podcast, Tyler Cralle, and today feels pretty good. It feels a little bit like a throwback because joining me here on the podcast is someone that I used to interview when I was on the radio, but it's been a little while, and he's now here on the podcast, and that would be Franklin Rouse. And so, Franklin, thanks for being here, man. I appreciate it.
Yeah, Tyler, thank you for having me. It's great to be back on with the legend. How long have you been communicating? For 20 years?
2009 is when I
But you did in college, too.
That's
right?
true. That's true, too. Yeah, so probably, yeah. I always joke with people, I started a podcast in 2005.
Right.
And to get on radio.
Yeah.
And I was like, I should have just stuck with the
Cutting
podcast.
edge. Yeah.
I could be Joe Rogan. Instead, I was like, I want to take this new format and find a way to get on this dying format.
Well, it's an honor to be back on with you, and certainly appreciate the opportunity.
Well, I appreciate you being here. And the reason I'm bringing you on is because of course, you are with State Farm. And actually, that's one of the things I kind of actually want to start with, because I know there are State Farm agents and then there are State Farm offices. And is there a difference there? Because it seems like you have multiple agents that are working out of your office. But then sometimes you just see kind of like standalone State Farm agents. And so how does that sort of dynamic work?
I mean, most agencies, if you are a direct agency, I'm not going to speak for the others, but like State Farm, you have an agent owner, which in my case would be me, and then you have a team that works for you, where you have customer service reps, you've got sales agents. And so most of the dynamic with State Farm is going to look like that.
Okay.
Right? So they'll have a retail office front. We're very much committed to customer service. So we want to meet our clients. We want to be able to interact with them. That's why we have the retail frontage.
And you're in Leland, right?
Yes. Yeah. 18 years.
Yeah, I was going to say, I mean, so you were like one of the, because what's funny is how much Leland's grown.
Yes,
but you were like at the forefront. Cause, I mean, the last 18 years has probably been pretty crazy.
Yeah, well, I mean, you could see it coming. I mean, it was one of the best decisions, of course, I've made. I mean, at the time, I was 26 years old. But I could see even then that the growth was coming. You had Magnolia Greens, Waterford was being built out, Brunswick Forest was in its infancy, and then there was permits everywhere that were indicating a lot of construction that was coming. So you could see the trend that was happening. And one of the appeals of being in Leland is it is part of the western part of the county.
Yeah.
So insurance companies tend to have more appetite if you're not right on the water, and so you have access to insurance, usually a little bit easier access insurance. And then you've got newer construction, which insurance companies typically prefer, too, because there's certainly less risk on a newer construction home than there is on an older home. Now,
I don't think I've ever talked to you about this, but why did you decide to get in the insurance business?
It was the first job offer I had out of college. The first and only. No, I went to work for an agent. I graduated from NC State, went to work for an agent in Chapel Hill, of all places. She's an old family friend. She recruited me. Worked for her for a couple years, and then went into the corporate side and did consulting with agents in the Triangle area on marketing and best practices. But knew I wanted to get into agency. I wanted to run my own business. I wanted to control my own destiny. The opportunity came up in Leland and started scratch, so I had no clients, didn't get a book. A team member started with me, Bridget Ross, my office manager, still with me 18 years ago. And the rest is history. But it's been a good run. A lot of changes, which we're going to talk about, I'm sure, but a lot of changes in the industry. Certainly, a lot of headwinds to the industry, like you're seeing on the mortgage side or the real estate side, is affecting all of us.
Yeah, no, I mean, it's like I said, I mean, just to sort of be in the sort of growth area, I mean, on top of like all the changes that are happening here. And so I guess let's kind of start with the question that I'm sure everyone asks you.
Why are rates going up?
Yeah, like what is causing this sort of skyrocketing of rates, as many people put it, versus what we've seen in prior years? Yeah,
so I mean, we've been through these cycles before. I mean, this isn't completely unusual. I mean, there are economic cycles to insurance just like there is in the greater world of finance. The big things that have occurred lately that some of them are obvious. You've got scale of global catastrophes that are completely unpredictable, that are happening, of course, more frequently. And people argue, well, they're not happening here. Florence in 2018 was a multi-billion-dollar insurance loss. It was a Category 1, 2 hurricane.
Yeah.
So you've got that happening. Secondly, you have inflation, and the cost of construction has probably doubled in the last 10 years. And oftentimes insurance values don't keep up with that increased cost of construction. And the premiums don't always keep up. And it seems like the insurance industry comes fast and furious and says, we need it all now because we haven't kept up with it for the last 5 to 10 years. And that's what it feels like now. The other thing is interest rates. So there's just less free cash flowing. So if you combine cost of construction and development that has occurred on an unprecedented level directly in harm's way, and not just in eastern North Carolina, but from Virginia coast all the way down to Florida, all the way through the Gulf of Mexico, you've had unprecedented construction. So you've got all this new growth, all these people needing insurance directly in areas that can be harmed by hurricanes. You've got the increased cost to build those houses and repair them, so claims costs are up significantly. And then you've got higher interest rates, so there's less liquidity in the system. Insurance companies, what a lot of folks aren't aware of is insurance companies oftentimes don't self-finance catastrophe. They will use retained earnings when they're financing to as a buffer, but they're often purchasing reinsurance, like Lloyd's of London.
Yeah.
You hear about some of these Nassau RE, you hear about some of these companies. And when everybody is looking to buy that reinsurance because they need it to finance their risk, the cost of that financing has gone up exponentially. And in some cases, companies can't get it. And when they can't get the financing, what do? They have to double their rates because they need to get their retained earnings up, or they shave down their book or their exposure, so they'll start non-renewing people. You'll see re-underwriting where they get really strict on re-underwriting. So we're dealing with some of all these factors. And you've seen with the North Carolina Insurance Underwriting Association kind of a repopulation of them. That's was intended, it's created by the legislature. It's a nonprofit association basically ran by the insurance companies of North Carolina. It was created to allow for insurance in these coastal marketplaces of North Carolina where private insurers may not want to go. And over time, that has expanded to almost to the east of 95, like where they are the biggest insurer. So when that happens, that a lot of the private insurers are weary of coming into the market. And right now, I think you're seeing some of that again because of they just can't finance all of their risk for a number of reasons. Now, we have seen it before.
Yeah.
I can't say exactly what the years were, but it was 2010, 2011. You saw a big boom in some of these smaller insurers out of Florida, oftentimes Demotech rated insurance companies. They came in, and then we had really low interest rates for a long period of time. I mean, money was free, basically, and it was all over the place. So these companies that did not have the retained earnings were able to come into the market and take some of that exposure away from NCIUA. But rates shot up pretty fast overnight, along with a booming economy and a lot of growth, again, directly into these areas that insurance companies have to finance risk for.
So, there's a lot to unpack. So, I guess let's kind of start where you mentioned sort of catastrophes happening in other areas. Mm-hmm. And so is that true, like for State Farm, which is obviously a national brand, but let's say you have a more like local company that's just sort of in this area. Is it all sort of the same risk pool? So, is it all sort of like this big kind of pool that all the insurance companies, so risk is based off of that, or is State Farm different than, say, like a smaller local company?
Yeah, I can't answer. I don't have the answers on the global financing side of it, but it's one pool. It's one global economic system. Okay. So if the California wildfires, which is billions of dollars, when events like that occur that are black swan, no one. I think that there was some understanding that there was risk there, but no one could have possibly predicted the scale of that loss. So we're talking about billions on top of billions of dollars. Tens of billions of dollars. So that takes money out of the system. Yeah. Therefore, the money that is there is now harder to get. Okay. So, reinsurers all have their own standards of what kind of risk they want and where they want to go. I will say, obviously this is a North Carolina, Eastern North Carolina show.
Yeah.
But our issues here are not nearly as significant as they are in some of the southern states, where you've got insurance rates that are 3-4 times what they are in Florida.
Yeah. Well, Florida's insane. You're like the housing market is getting just absolutely rocked by these, skyrocket. Well, they've had twofold. One, higher insurance rates, and then of course you have these condos that are after that. The condo collapse. Now all of a sudden everyone's having to reevaluate their buildings, and so they're seeing their HOA fees shoot up, and so it's like a double whammy for a lot of places in Florida.
Yeah, and Florida's gotten hit hard,
Yeah.
and so you've had multiple storms there that have been, particularly the Panhandle coming out of the Gulf, that have been enormous, and then of course they've got the condo crisis, which somewhat relates to insurance, but I mean it's not just Florida. I mean Florida's, I don't know the average premiums there. I saw recently were homeowners were like $7,000.
Wow.
Louisiana's more. In the state of Louisiana, it's $8,000 average homeowners premium. So I mean, if you look at North Carolina, I think the average homeowners premium in North Carolina is low 2000s. Okay. So if you're buying
on the coast,
it's going to be a little bit. It's obviously going to be more than that.
Yeah.
And then if you bake in other risk factors like age of home. The insurability of the insured, so if you've had multiple claims or, have a poor consumer reporting, that's going to be a factor. And then the quality of the home and proximity to the water. I mean, obviously, the closer you get to the water, you're going to run into less competition from insurers to want that risk, so you're going to be paying more.
Well, and that's another thing that's kind of interesting, too. A lot of people probably don't realize. I mean, it's the same thing with the mortgage side, right? Where, like, all these factors go into, like, your ability to – we're going to look at you as a borrower. But you guys kind of have that same thing when you're looking at insuring someone, like the person, but also the property. It sets their rates.
Yeah, and insurance companies all have different standards. But I can tell you now, I mean, the roof – and it's become somewhat of a national news story how insurance companies are underwriting roofs.
Yeah.
So they're doing a lot of that more up front. Because that's, of course, the first line of defense for a home. Roofing contractors in the industry, are certainly coming in and trying to get people to file claims and get the roofs replaced. Sometimes they get paid, sometimes they don't.
Yeah.
But even a claim that's not paid costs money. So if you have an old roof on a house, higher likelihood that you're going to be filing a claim for something, whether that's wind-driven rain, leaks coming into the house, or you're going to be filing a claim to try to get your roof replaced, whether there's actual direct physical damage or not. A lot of times people are influenced to file a claim. And so when you file a claim, insurance company has to send an adjuster out. Sometimes they have to send an engineer out. If the insured and the roofing company are determined, then you may have to go out there 2 or 3 times. And those things cost money, of course. Even if you're not paying a claim, there's still cost to it. So you're seeing more sophistication on the roofs, where they're looking at that up front. Are you missing shingles? Is there discoloration? Do you have trees hanging over the roof? Do you have streaks? All of those indicate that there's either roof age or there's roof deterioration. And so, we've seen now, like, literally right up front where they're looking at the roof immediately. I don't know what the technology is, but they can see it. And then you've seen stories, and I can't say that State Farm is doing this or not, or other insurance. I don't know who are, but where they're using drones to re-underwrite. Where they're going around and flying drones up and looking at roofs, and that, of course, has been somewhat scandalous in the media because there's privacy questions about that. And I don't know that that's happening in North Carolina, but I do know that there is a much greater focus on that roof up front, and then you're likely to get more questions as that roof ages about the condition of the roof, to get your policy renewed.
Yeah, I mean, we see that on our side, because you'll hear people say that they'll be looking at the roof and wondering if that's going to mean that there's going to be a claim and sort of how that's going to impact the insurance and.
And you're seeing kind of a rise of the roof washing industry, where people will come in and they'll clean your roof to make it look newer than it is, which makes sense. And they'll argue, and I don't know the science behind it, but they'll argue that it's also improving the quality of the roof when they do it. But that does a couple things. One, it gives you better curb appeal. Yeah, it's going to reduce questions from the buyer about roof condition, and then it also, insurers may not see the stains or the other issues that were existing before. So anyway, we are seeing some of that.
Now, this might be a dumb question. Wouldn't be my first, but
you've asked a lot of questions, Tyler. Yeah, it's okay if you've asked a dumb one every now and then.
It's like, what do they always say? There's no such thing as a dumb question, just a dumb person asking it. But when it comes to, we mentioned the global catastrophes or the California wildfires, tens of billions of dollars. Is that going to have a bigger impact on rates than let's say we get like maybe not even a Cat 1, maybe a tropical storm that does some damage? Is that going to impact our area more than something bigger in another area?
And again, I'm not an expert, but yeah,
that's why I brought you on.
Yeah, I'm a retail insurance agent, but I do have some experience serving on the board in NCIUA.
Yeah.
So I have seen in some ways how these rates are determined, and these bigger black swan events, the ones that cannot be predicted, that are so bad, have a greater impact overall on everyone. And I think it does have a bigger impact on North Carolina than, say, a tropical storm where you have, because those rates are baked in. I mean, there's expectation and understanding that we're going to have storms here. It's when you have these unforeseen events, whether it's here or Florida or Louisiana or Texas or California or Hawaii with their wildfires, I think those probably have a bigger impact, probably directly affects us more than like a tropical storm or depression or something like that.
Now, you mentioned sort of the government component, because this is another thing that even sometimes I get kind of confused about, because, every year, you see the headline where it's like insurance companies ask for, I think this year was 100% increase in premiums. Yeah. And then of course the story disappears. And then all of a sudden, like 6, 7, 8 months later, we see an update where it's like they negotiated, a 30% or 20% increase, whatever it may be. And of course that's an average. And, here on the coast, we got a bigger hit than people say in Raleigh or Durham. And so what exactly, how does that work, I guess?
So it's interesting because not all states are bureau states. Okay. So this is a rate bureau state where it's a group of insurance companies have representatives that set and approve rates, and they also have some say and setting and approving policy conditions and coverages and stuff. But the rate dance that is done, and it seems to be a dance. Yeah. I mean, based on what I've seen, there's always a huge number. Yeah. It's always. 80%, 100, something just blows your mind. And then it gets into the media. Yeah. And then it, whatever the local media is, will report 100% rate increase proposed by insurance companies. And then several months later, so they propose, and I don't know why they go for 100%. And I don't know that they ever fully expect to actually get.
It's art of the deal, right? You got to ask for the really crazy high number.
It seems to me to be art of the deal. So they ask for a big number. The insurance commissioner has a negotiating ability with the rate bureau. Insurance commissioner has a very difficult job. People often see him as just a consumer advocate, which he in a lot of ways is. But he's much more important than that, because if he doesn't give insurance companies a rate that they need to feel like they can be profitable in a state long term, they'll leave. And when insurance companies leave, then you have less insurance companies, and then you have less people competing for insurance policies, or less companies willing to write unique risk. And so you want a robust marketplace. So he has to do a dance, and so usually that dance lands somewhere around 10%. And I think that's where this last time around is 20% total. 10%. Yeah. If you're coastal, it's 10% a year. You can get 10% this year and then 10% next year. The beach plan, so beach means if you're on a barrier island, those rates are a little bit higher than that. I think they're 30% over 2 years. Maybe wrong, but it's something like that. Now, insurance companies also have the ability to deviate from rate. They can do what's called rate filings, where they can give certain discounts based on, customer relationship. How long have you been with the insurance company? Are you claim free? You get a utility discount because your home's new construction. Multi-line discount if you have multiple policies with that company, usually home and auto. So you do see deviations, but when those rates do go up, the tide has risen. So you can usually expect your rates to go up. I
was wondering about that because, it's funny because you see this rate and it's like, all right, 10%. And then other people look at their bill and they're like, my bill went up by more than that or something along this. So that's just sort of like a baseline. Yep. And then everything else then. So I guess how does that baseline then impact the individual person? And
so if you're with NCIUA, which most people are, most people have an NCIUA wind policy. Okay. A lot of people have a dwelling policy or a homeowner's policy, and there's a little bit of difference between those two. You probably don't want to bore you to death with those differences. But that is the biggest insurer, East 95. They just take the rate.
Okay.
So they automatically take the rate. They don't have the deviations that other insurers can. Now, when there's a competitive marketplace, some of these companies may come in and say, we're going to do our rate filings below what the rate bureau rate is. We're a harder market now, so we're not seeing a lot of that. I can't say that it's not happening, but we're not seeing as much of it. So when that does happen, you can usually expect that you're going to get some sort of an increase. If you've got a wind-hail policy, it's going to be pretty darn close to whatever that increase is, or you've got an NCAU policy, it's going to be pretty close to that. If you have a private insurer, you may or may not feel the full brunt of the 10%.
And so, because what's happening is that people are constantly getting their policies redone because it depends on when you bought your house and when you get your policy. And so when you do see an increase like that, so it applies to, I guess the calendar year, the next year, is that when it gets applied? Or, because I've always wondered how that works, because you're always seeing policy renewals and then they have like calendar years when these rates go into effect. But so, I guess that's when it is.
It's usually June 1.
Okay.
That's a popular date, but they can have multiple increases in a year.
Okay.
And insurance companies themselves can file for their own increases. And so, like individual companies, the cartel, the group, the rate bureau files for everyone, and then individual companies can, like I said, they can deviate some from it. But usually, like with NCIUA, if we're using that as the baseline, that's usually in June.
Okay. Because, like I said, I've always sort of been sort of curious as to how that then gets applied, because people will be like, my rate went up, and then the announcement comes out, and then they're like, wait, what? So now my rates are going to go up again.
Go up again? Yeah.
So I think it always kind of throws people off. But I'm glad you brought up sort of the different kinds of insurance, because that is one of the things about living on the coast, is that we do have to deal,
Flood,
more,
yep.
with flood. And so talk a little bit about kind of how that, obviously, from our perspective, we always run and see if you're in a flood zone. If you're in a flood zone, you got to have flood insurance.
Yep.
If you're not in a flood zone, you can still get flood insurance, but you don't need it with regards to qualifying.
To qualify for a federally backed mortgage.
And so, obviously you sell insurance, so you probably want to say everyone should have flood insurance, but it does seem like, because when we do see like Florence, for example, where we saw flooding in places that no one ever thought we were going to see flooding, and it does sort of make sense. And usually,
and a lot of uninsured damage.
Yeah, exactly.
And like in the mountains, most of that was a absolutely catastrophic event.
Yeah.
But a lot of that was not really a meaningful insurance event, because so much of that was uninsured.
Yeah.
Because it was flooding or ground movement or a mudslide, something of that nature that's excluded. A good agent will run a flood zone determination for you. If you have a conversation with your agent, there should be a conversation there about what's covered and what's not covered, and flood is the most obvious exclusion. And just because you're not in a federal predetermined flood zone doesn't mean that your house can't flood.
Yeah.
Mother Nature doesn't know where the flood line begins and ends. It can keep going. So, if you're working with an agent that's familiar with an area, they can also go back on their experience and say, this area flooded or this area almost flooded. And you can pull up the maps and see, like, are you close to a higher risk flood zone? Is your home close to that? And if it is, then we will consider, think that you should strongly consider a flood insurance policy.
Yeah, it was crazy. We were actually looking at doing a loan for someone in the mountains last year when Helene hit, and the loan was closing like the week after the hurricane hit. And so obviously when the hurricane came through, everything shut down.
Yes.
And we don't even know if the house was still there. We had to figure out if the house was there. And it was it was like, this is the craziest thing I've ever seen. And then they end up pulling out of the deal because they're like, regardless of what happened. But
too much uncertainty.
I've never, because obviously I haven't been in the business where we've had a storm, and knock on wood, hopefully that's not ever the case. But it was just crazy that it was like, we can't figure out if the house is even still there anymore.
That's where drone technology, I know, like in the claim situation, like NCIUA was using a ton of drones.
Yeah.
Just trying, because they couldn't get to the house.
Yeah.
So they're trying to figure out, if there's obvious clear damage to the house, if there are trees falling on it, if there's mudslides, that kind of thing.
Well, and
it's
interesting to bring up the storm thing, because we were actually just talking about this with some of my colleagues here at work, because historically, if you look at the biggest storms that have hit this area, they're all in September. Maybe one in October, but it's all September.
Yep.
It's something to think about. And so we were talking with real estate agents, letting them know, because if a storm does come in our way,
moratoriums.
We see everything. You can't close on a loan, regardless of what's going on with the storm. So talk a little bit about how that happens.
NCIUA they have quadrants where if a storm gets into a quadrant, they automatically shut it down. So even this last Aaron that came by, it shut down for 2 or 3 days where you couldn't write business. So if you didn't have a bound paid for policy or a bound policy, like you were probably going to be pushing back at closing. Some insurance companies have different standards for that. I'm not going to speak to what State Farm's are, but if there's clear and present threat, you can assume the insurance companies are going to have moratoriums, meaning they're not going to take on new business until that threat goes away because you're dealing with too much adverse selection. People trying to increase coverage or add coverage knowing that something's going to happen. But that is, we look at the tropics first thing in the morning, and I look at it several times a day. I have PTSD from dealing with it in the past. So, it's not a great way to start your day, and it's not a great way to end your day. But if you're in the business, you have to be paying attention to it. And, we try to notify our clients if we know that they have a closing, like we may need to go ahead and bind this now, like even if it's a couple weeks away. Because this time of year, there's constant threats. It's peaceful out there now, thank goodness. But you can just assume that there are going to be 2 or 3 threats.
Well, it's also a good reason why you need to find a policy and lock it in because you do see people that want to shop, and it's like, I get it, you're looking for a policy at this rate or whatever, but it can bite you because if all of a sudden this storm comes out of nowhere, which can happen, and all of a sudden you were supposed to close and you haven't decided on a policy and we haven't gotten the binder, that closing's getting pushed back, and so it's like especially this time of year. Pick your insurance and get the policy.
And have a conversation. You should be talking to an insurance agent if you're buying a house, period. We suggest that you have a actual conversation with them, not just on email. If it's your first time buying a house, absolutely. There's such a misunderstanding about what a homeowner's insurance covers versus what people think it covers if they've never owned a home before and never dealt with loss. So if you're having a conversation with your agent, a seasoned agent's going to know, okay, well, we need to go ahead and get some binders on this, meaning they can go ahead and bind coverage for a future date and then collect that premium at closing and lock you in. So at least you're aware, okay, if there's a system brewing, I may need to go ahead and lock something in sooner than later. The good thing about hurricanes is you also they're coming.
That's true, yeah. And you get a little heads up.
Yeah, and in ours, they tend to come off the coast of Africa, so you've got plenty of time. But as soon as the thing gets around the Caribbean, even if it's not coming our way per se, they could have it tracking into Florida or pulling off like Aaron was, and they still shut it down. So it's definitely something to be mindful of in a closing process.
Because it is like, it is like a box, right? It's drawn.
A box. Yep.
And so like if it hits that, it's locked down.
Yep.
So it doesn't matter, like you said, where it's going.
Yeah.
It's in that box. It's gone.
If it is posing absolutely no threat, I think there is some judgment there, but I would work under the basis that if it gets in that box, which is 4 or 5 days out from hitting us, you need to be locking stuff down. And hopefully you've already done it before then. But September is without a doubt, in my experience, I'm not a meteorologist, but that is the most active time where, and living here, September's one of the nicest months of the year.
I know.
But if you're in this business or your business, like you're stressed out. You're like, let's get to mid-October. And the hurricanes happen in October, but they're far less likely.
Yeah. I think, like I said, usually the funniest thing ever, I don't know if I've told the story, but my 40th birthday, me and a bunch of friends decided to go down to Little River and go on the casino boat.
Yeah.
This is like
Big A or Big H?
Big M, the Big M. And it was, and mind you, this is like right after COVID. So like, this is like our first like trip that I'd been on.
Yeah,
it was like 21. So everything was still kind of weirdly, it was still kind of a weird time. And we got hit by this hurricane, and we never got to go on the boat because they couldn't take it out on the water.
Yeah,
and it was the end of October.
Wow.
Okay. It was like October 29th, 2021, and we
I'm trying to remember which one that would have been.
It was it was nothing big. It just was messing up the water to the point where they couldn't take the boat out, and it was cold, and it was like the funniest trip because it was like we got hit by a hurricane, like a tropical storm, like
you did not want to be on that. I can't imagine.
I kind of didn't want to be
the level of seasickness being on that thing.
Yeah, no, it was. But I'm saying is like that was just like a weird thing that happened at like the end of October. But
let me think. Last year we had that system that came out of nowhere, which ended up basically being a tropical storm.
Yeah.
That was
like out of nowhere
in September, and there was a lot of criticism on authorities because they weren't prepared. Schools weren't canceled. I wasn't thinking about it, and it came out of nowhere and dropped a ton of rain. We had 60-mile-per-hour winds, I think.
Yeah.
So things like that can happen, and we do get storms into October. And if it's a storm and it's posing a threat, you can expect that insurance companies are going to have moratoriums.
I mean, I think the hurricane season ends November 1st, right?
Yeah.
Okay. So, I mean, that's another. I mean, that's why a lot of people think it's like, oh, Labor Day's over, so we don't have to worry about hurricanes. And it's like, actually, this area.
This is prime time. This is
weird.
peak season. I mean, I think peak season is September in general, but it certainly is for us here. Yeah.
And it's probably also not a bad idea, even if you've already bought a home, to just go over your policies again when a hurricane's coming, because
do it before then if you can.
Yeah, well, obviously, yeah. I mean, because it's. I remember when Florence hit, because the flooding was so bad that all of a sudden it was like, how was the damage to the house? Because if it was wind, then it's wind insurance, but if it's flooding, then it's flood insurance, and then if it's rain, it's something. And so it's like that's another thing, is because you need to have all those policies, because you don't want to be in a situation where it turns out the damage was actually caused by something that you're not covered for.
Yeah, and I mean, it can happen where, because it is somewhat of a unique situation here when you have a homeowner's policy that excludes wind, and then you have a wind-hail policy. Now, there are some insurers, and at times there are a lot of insurers that will include wind. Less of that going on now. So you may have a homeowner's policy, more than likely, homeowner's policy, and then a wind policy. And a lot of times your underwriters may not understand that.
Yeah.
And so they write in just the homeowner's policy without the wind, and then you close. Your mortgage company doesn't pay the wind policy. They don't collect the premium at closing. They don't pay the wind policy. You don't know it for whatever reason, or you're willfully ignorant about it.
Yeah.
And then you don't have coverage for wind. So I mean, we typically advise every couple of years, talk to an agent about your coverage, because like we've seen, we've had unprecedented price increases too. So your home may be woefully underinsured, and then just have a basic understanding at least of what your policy covers you for and what it doesn't, more importantly, what it does not cover you for.
Now, I mean, talking about knowledge of sort of your insurance policies, I mean, I think that also would apply when you're sort of shopping, because I can't tell you how many times, we'll have someone who will tell us they got this great rate from someone, and then we go look at the policy and we're like, we can't use that. Like, it doesn't cover enough. Like, you need, like, we have a minimum standard, and, I mean, you probably would want a little bit more. But, I mean, I guess that's probably something that you come across where someone goes, hey, why is this company X and you're this?
Sure.
And it's like, oh, well, it's because they're not paying for anything. Or you got a crazy high deductible if something does happen.
Right. And and that's if you're buying a house, you need to know what your deductible is, and also understand that your wind deductible or named storm deductible is going to be more than likely much higher. So you need to be financially prepared for that. It does not need to be a huge surprise, and it's an inconvenience, but it doesn't need to be financially devastating. It shouldn't be a big surprise when you have that deductible. The most broadly used policies for a single-family dwelling is the HO3 special policy form. If you have that policy, more than likely the coverages are pretty similar from company to company. Highly regulated industry, so that is a usable policy form to be marketed in North Carolina, and it's without question the most popular. So the coverages aren't going to be that different. Now, the policy language there may be a little bit different policy language, but the coverage should be pretty similar on those. But we do see people that have what's called dwelling policies, and they are really pared down in terms of perils. Oftentimes they're actual cash value policies. And there's a couple reasons why those may be written. One, they may be way less expensive. Or two, it may be that the company that wrote it didn't have another option. Like, that's the only thing that they would allow or they could write was a dwelling policy, because the company or the companies that they represent weren't willing to write a full-on HO3 special policy form.
Now, do you guys, or do you, I guess your office, do you guys also do like HOA policies, or is that like a different branch, or does someone else?
We do. Mm-hmm. I mean, I'm not going to say that's something we absolutely specialize in. We can be competitive on those, but yeah, there are other brokers in town that will specialize in that. State Farm pretty stable on pricing, but there are other companies that have kind of a niche business in that space. But yeah, we will do it, and that's what we want to understand primarily is we're usually doing the condo policy, so the unit owner policy, the HO6 policy. So we want to know what are the conditions, or we certainly want the insured to know, like, what is the language, what are the bylaws in your HOA, what are the covenants in the HOA? What are you responsible for as a unit owner? Because that can be very different. I mean, I work under the assumption that you have some responsibility when you walk in the door of ensuring what you can see. Some of these covenants say it's original spec, so it's the HOA is going to cover or is responsible for everything you see when it's originally built. That's a fairly popular, but there, you may run into a situation where you're responsible for everything in that unit. So drywall, floors, cabinets, ceilings, all of the improvements inside that unit you may be responsible for, and so you want to have adequate insurance to cover that. I mean, it's costly.
Well, yeah, I mean, that's interestingly enough why, we've seen HOA fees increase so much. It's not like new amenities. It's mostly because of the insurance.
Yeah. So the bigger the amount of insurance is right now, we're in kind of one of these, now this is anecdotal, but it does feel like we're in one of those situations where the more insurance you buy, the more expensive it gets. Yeah. It's not a Costco where the more you buy, the less expensive it gets. Seems to be, and part of that is because I think insurers are having a hard time placing the risk and financing it. So you have seen the HOA dues go up enormously, and a lot of that has to do with insurance. And a lot of times what HOAs do in response to that is they take way less insurance coverage. If you're on a board and your members are complaining about dues going up, what are you going to do? I mean, I could see how you'd be pressured to make decisions about insurance. So they'll take less of the financial responsibility to repair the home or maintain the home from the HOA and put it on the unit owner. And so you got to be paying attention. It can be complicated. These HOAs can certainly be complicated. There are well-ran ones, very well-ran ones, and then there are like anything else, there are poorly ran ones.
You also want to make sure the reserves are.
Yeah, they got to have retained earnings for capital improvements, because if not, then they'll assess. For just the basic stuff like replacing a roof or replacing siding or landscaping, whatever. If there's not a reasonable amount of cash in their balance sheet, then I would be concerned. Yeah.
I did want to talk a little bit about, because the one thing that we're seeing is that because, home prices have increased by so much, we have higher interest rates. You do have people who are like on the cusp of being able, and I talked about this with Commissioner Dane Scalise about property tax playing a role in that. If there's an increase in property tax, then all of a sudden that person's ratios don't work. And I mean, the same thing with insurance. And so, I mean, I know you probably have those conversations every day with people where they're like, I want the bare bones, like the cheapest ever, but you have to balance that with that higher deductible that we talked about. And so that's got to be probably one of the biggest conversations.
Yeah. And that is concerning.
Yeah.
Concerning where you're trying to squeeze someone into something that, I mean, I think that there is certainly not necessarily incentive, but there are lenders that want to get a deal done no matter what.
Yeah.
And there are some circumstances where it's probably not in the best interest of that person to buy the house.
Yeah.
And it's hard to understand that at that time. I really am concerned if you have a hard time making a mortgage payment or you have a hard time qualifying for a mortgage, are you really going to be able to afford a $5,000 deductible or $2,500 or whatever it is, a higher deductible? And we don't want to be, in our agency, I don't want to be pressured into forcing someone to take a higher deductible just to qualify for a mortgage, because it's probably not going to end well.
Yeah.
I work on the assumption if you live here long enough, you're going to have a claim. Yeah. So when I work with my team, I say, look, we have to, when you write something, just expect that there's going to be a claim on it. Hopefully there's not, but we have to work under the assumption that we will. I mean, we will, at some point there will be an event here, and we're going to have a lot of claims. And, it is sad when somebody can't afford to repair their house. Yeah. Because they probably couldn't afford the house in the beginning. And I'm not going to try to pretend like I understand exactly what the qualifications are for a mortgage now and how you qualify for that. I'm sure the standards are probably pretty strict.
Yeah. From where they were in 2005.
Yeah. So, yeah, for sure. So I'm sure they're pretty strict, and some people can qualify. and they might need a higher deductible. Maybe they can afford a higher deductible, but we don't want to take people into an unreasonably high deductible.
Yeah.
We certainly don't want to compromise coverage just so that they can close. I might lose a lot of business for that, but it's probably business that we don't want, because we don't want to be dealing with people that can't pay a deductible.
Well,
we don't want to be in a situation where we have to tell somebody, oh, your deductible's $8,000, and they're surprised by that, or they're not prepared for that. So if they, we typically get people to initial, if they're taking higher deductibles, so that they pointing out, like, you are aware, like, this is a higher deductible, but it's not a business practice that we would prefer.
Well, it's interesting because,
and I don't know anybody in the industry that
that
would, but I get that happens particularly first-time home buyers, happens a ton.
Well, it's interesting too, because you look at, you mentioned flood and kind of how in places like Wrightsville Beach, where, most beach communities, where it's basically like the government subsidized sort of flood insurance is what's helping keep rates low, because every once in a while you hear these stories about how the government's going to get out of flood insurance, and then you see where those rates are going to go to, and then it freaks everyone out, and everyone makes a bunch of phone calls, and then the government goes, all right, we'll do it for a couple more years. But you do get in that scenario where if you are looking at the beach, and let's say there isn't government subsidized flood insurance, and so you're paying $20,000 a year, where it's like someone goes, all right, what's the likelihood of a storm hitting? And instead of just paying an insurance policy, do I just put that money in an account, and then if my house gets torn down, rebuild the house? And like I said, and that's kind of what used to happen on the beach before they built these like mega mansions that we now have.
Yeah, well, I'm sure that there are. I mean, even now, I'm sure there are a lot of self-insured people.
Yeah.
Exorbitantly wealthy people. They're able to buy these multi-million-dollar houses, and they're choosing not to pay for the insurance because they don't think it's a good deal, I guess. Now, if there's mortgage, like you're gonna have to have it. But like an inherited home or something, that people may choose not to carry. There are folks that have owned houses on the beaches for in their family for decades, and they say, well, we haven't had any serious damage. I'm not going to pay thousands of dollars, or in some cases tens of thousands of dollars for insurance. That is a personal choice. I don't recommend it.
No.
I'm not going to recommend it to anyone. But I think that some people do make. I know that some people do make that decision.
Well,
Not for everyone.
No,
it is unique. Very
like
unique.
I was saying, is like I feel like that was sort of, like I said, back in the day when beach houses used to be like kind of rundown houses that were in families forever, and if they hadn't been on the beach, they'd be like a $40,000 house, but they're on the beach, so because the land's worth so much, and so the people go, well, we'll just rebuild this house if it gets knocked down, because it kind of is a crappy house.
Yeah. And
now you've seen this build up. Wrightsville Beach, some of these houses that I see for sale, it's just it's that just would not have existed, 40, 50 years ago.
It is. It's absolutely remarkable what's happened. And I don't know. I think there's private equity involved in a lot of those. Where groups of people are buying houses as investments. They're renting them out. I don't know what the weekly rental is in Wrightsville, but it's a lot more than it used to be. So I don't. Are they self-insuring? I don't know. A newer construction home is going to be less expensive to insure.
True.
So if you have an older beach cottage where the windows haven't been replaced, the roof hasn't been replaced, the HVAC, electrical, plumbing, none of that's been done, you're going to have a hard time getting insurance or reasonable insurance, particularly replacement cost insurance. And it's going to be a lot more expensive. Yeah.
Well, one thing I also wanted to bring up is, talking about kind of the Leland area where you're seeing like all this development that's taking place. Just every time I turn around, there's a new development that's being built. But the issue that I guess we see mostly in Brunswick County, it happens in New Hanover, but you are hearing more horror stories of sort of this flooding that's happening just because of these storms that because we're in the summer here. We get hit with a storm and it just pours rain for like 3 hours and then it's gone, and you just see this like stormwater flooding that's happening. So I guess that is something that you guys take into account when doing policy. For sure. And I think the developers, by and large, they're taking painstaking measures to prevent it. I think everyone involved is, but there, with Florence, there was areas that flooded. And anytime there's a storm, in Florence, it wasn't a major wind event. It was to some people, but it wasn't a major wind and surge event, but it was a massive water event because we know it sat here for 48 hours and just dumped rain the whole time.
And when you get that much rain that fast, which is fairly unprecedented, you're going to have areas that flood. Now, I'm not going to say I'm an engineer or meteorologist and know with the construction how that affects where other areas flood, but we are definitely seeing areas that are having standing water that have not before. So, yeah, I mean, it's like I said, every 2 years you need to talk to your agent, talk about your coverage, talk about your circumstances, and particularly if anything changes meaningful. You know, if you do something significant to the house, or you know, if you're concerned about flooding now, like you need to talk to an agent. And ignorance isn't an offense, you know, so you can't say, well, I didn't know. I mean, that typically ain't going to work. So I didn't know it didn't cover flood, or I just assumed that it was. So you know, that's why it's important to have a relationship with an agent that you can talk this stuff about.
And weren't you one of your offices for one of the storms? Didn't you have to stay in your office like for all the phone calls you were going to get, or did you get to go?
Yeah, well, for Florence, my daughter was born in Raleigh.
Oh, okay.
My wife was 9 months pregnant, and she went to Raleigh. And that's why I have PTSD. Because, because you're worried about your house, you're worried about your business, and you're also very worried about your customers.
Yes.
And they're calling. And so, you know, what I typically do, and I think a lot of agents do this, is they'll send their team out of harm's way where they're going to have power, electricity, hotel, you know, somewhere west or south or north or wherever, you know, not where the storm's going, so that they can access and be able to reach customers when they need us the most.
Gotcha.
Now, in my case, yes, you know, we stayed. I basically lived in my office. Because you're just getting, tons of questions.
Yeah,
and there are people that had significant losses, and they need somebody personal then and there. You know, so that's our commitment. Most agents' commitment is to be available. You know, so we want to be available, you know, on your worst day, which can occur after a hurricane.
Well, I just wanted to give you a shout out because I was on the radio for those, we were doing live broadcasts. And so pretty much everyone we know left. Yeah. And I was so mad because I was stuck here. We thought it was going to be a Cat 5. Remember, it was picking up speed, and then luckily it really kind of fell off and was only a Cat 1. And
the front came through, killed it. That's what made it stick around. But thank God it did. I mean, because you're right. If that 4 or 5, there was also knowing that my wife was in labor and pregnant. And you know, it was as stressful as I could possibly, because there was a belief that this place would be forever changed.
Oh yeah, yeah.
Because it was, you know, coming straight up the Cape Fear River as a Cat 4 or a Cat, momentarily it's Cat 5. We certainly believed it was going to be a Cat 4. I mean, the wall of water that brings, the wind that brings, the force that brings would have been game changing. Fortunately, for most, it kind of fell apart, turned to 1, and didn't bring that kind of widespread damage. But the damage was still significant. And people had very significant losses. No,
there's no doubt about it. You still hear about people that are having to deal with the after effects, and that was 7 years ago. So yeah, but Franklin, we can keep going, but you're a busy man, so I know you got to go. You're lender and running a podcast. You're a busy guy as well, Tom. Well, I appreciate you taking the time, kind of explaining the insurance situation for everyone, and thanks for being here, man. Good seeing you. Yeah, thank you. I really appreciate it.